fold in the issues you're seeing in multifamily and other residential housing, what are people missing?
I mean, it's a very basic analysis right now of value. If interest rates are 4 to 5% and cap rates, which is how most multifamily assets get value, are much higher than they were 3-4 years ago, and rents are not up at the same pace, the values went down. Now, the question is asset by asset, geography by geography, how much did they go down? And in certain areas in the country, we're seeing that they went down to a level that the equity is impaired and some of the loans are impaired. And all of those loans need refinancing, and not all of them will be able to get it. Definitely not at the proceeds level needed.
You think about the rise in yields that you've seen today across the curve, 2s, 10s, 30s, and the repricing of expectation for a rate cut environment this year. How much of a problem is this for the housing market, the mortgage market, the lending market to larger properties as well?
It's a big problem. A lot of owners, developers, and lenders were hoping that rates would go down faster, which will help the valuations and the cap rates. It doesn't seem that it's going in that direction. It seems like we're going to be in a higher interest rates environment for longer than the market predicted, which means the issues for commercial property, real estate, multifamily, and lenders and commercial banks are significant. And this year is the year of reckoning, where a lot of these loans are coming due, and losses will be recorded on some balance sheets of the banks.
When you think about the pains that the regional banking system is facing, there is a lot of dispute, this idea that perhaps investors have thrown the baby out with the bathwater, that perhaps New York community banks' issues are more isolated. Do you see it that way, or do you see more pain across the group?
So first of all, we're a client of New York Community Bank. We love them. We think they're a great team, and we really hope that they'll see it through this challenge in a strong way. It is isolated. Not all banks are created the same. Looking at balance sheets of banks, you really need to look at what leverage loans, what covenants we're giving, and who are the ultimate borrowers and sponsors, because at the end of the day, it's very borrower dependent. If you have stronger balance sheets, they'll be able to support the assets, put some cash in, and see it through to the other side. A lot of the problems rely with the smaller equity syndicators that don't really have the capacity to support their assets now. And in those cases, we see them returning the keys. Also, obviously, big portfolios of office that are not holding the values as well. And those, we've seen large groups, Blackstone, BlackRock, et cetera, return keys. But that has been more isolated case by case.
We were talking a little at the beginning about the ability of private capital to step in. What's your estimate here on how many loans will simply just fall into distress and not be able to find a home?
There's billions. It's hard to estimate, but there's billions of loans that will be in distress. There's until the end of 2025, there's over $1 trillion of loans coming due. Not all of them are impaired, obviously, but we're talking in the billions. And in certain banks, it's very concentrated risk.
Ron Eliasef of the Northwind Group, we thank you for your time and a look under the hood of these complicated markets. And we're going to check now on the broader markets with Abigail Doolittle. Abby?
Well, we do have this sell-off on the day here, Shonali, but we are off the lows just a little bit. Nonetheless, we're looking at all of the major indexes down more than 1%. For the Russell 2000, you can see it's a significant decline, down 3.4%, the worst day since September of 2022. And then take a look at ARM, because all of this, of course, on that hot CPI print, the fear that the Fed won't be cutting until July. Not so long ago, the expectation had been March. So liquidity concerns, valuation concerns. ARM, which had at one point yesterday been a double since it had reported earnings last week having to do with its real AI chip. So a deserved gain, but maybe too big, frothy animal spirits, giving some of that back today. So a sign of the times. This also, let's take a look at what's happening for yields, because of course on that hot CPI print, well, this chart really tells the story. For the 2-year yield right now up 11 points, close to 460, maybe heading higher from here. In terms of what this could mean for the S&P 500, typically we wouldn't look at a terminal chart that we had just looked at yesterday, but to check out the progress of the S&P 500. So last August, there was a little diamond top that we've taken out. The diamond top that had been in here has morphed into this other broadening formation. It's a topping pattern. Take a look at this. We have a gap down. That tells you that today's sellers, they're totally taken off guard, likely to drop down to the bottom of this range. The RSI is going down. We could be entering a period of risk off. And speaking of risk off, Sonali, let's take a quick look at Boeing, because we do have the stock on the year adding to the losses. And this on the news that their deliveries fell by 29% to 27 jets in January from a year lower. A lot of that pressure around that 737 MAX, Boeing under pressure. Sonali.
Abigail Doolittle, we thank you for your time. Now, coming up, former President Donald Trump is pitching a 60% tariff on all Chinese imports. We're going to discuss that next in today's Wall Street Week. Stick with us. This is Bloomberg.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
That's a question I get all night.
Bloomberg, top experts, great questions. After 10 years, Joko Widodo is wrapping up a hugely popular tenure as president, and Indonesia will have its first three-way election in 20 years. Will Indonesia continue along Jokowi's path of free and active foreign policy, or will his successor lead the country in a new direction? Keep it tuned to Bloomberg for live coverage from Jakarta and all the results and analysis you need. Indonesia decides. Coverage starts Wednesday right here on Bloomberg Television. Context changes everything.
So as you look back on your career, what would you say is the best investment advice you've ever received?
Probably the best investment advice that I never received, but that I've lived my whole life around, is surround yourself with really good people. I thought about it just today, like I do many times, what makes a great investor? A great investment firm is comprised of people who are optimists and pessimists and realists. Because in the intersection of the debates that go across that wide range of personalities is where you find truth. It's part of the reason I'm so focused on freedom of expression. I see it in my own four walls, the robust and fulsome debates around how we commit our capital, what defines a good idea, what businesses to build or pursue. That's what drives the success at Citadel. And I've been very fortunate in life to have always had a group of friends who really push me, who make me better. And here I get to work with 3,500 colleagues who in their ways make me better each and every day. And collectively, as a team, we've had the opportunity to have an incredible impact on the financial landscape around the world.
Time now for Wall Street Votes. This is where we take a look at what the election coming up